stumbling bull is really what we have at the moment because of a number of days in a row of losing on the market. And of course, Friday closed the same way. Even some of the tech stocks got really beaten down. But of course, the night before, Iran and Israel had another little dust up. So geopolitical risk is happening. Earnings season's getting ready, but there's a lot to talk about here today.
Yeah, there really is. Investors have been reminded that investing does entail taking on risks, and our job is to try to figure out whether or not those risks are well compensated or not, because you can't really get away from the risks unless you want to, cower in a corner. And if you want to grow wealth over time, it does involve exposing yourself to prudent risks, and that's really what we do. Most recently, a lot of the dust up in the market has been around between Iran and Israel, as far as what's going on there. Thankfully, it looks like that might be dissipating. That is not escalating. Let's hope that is indeed the case. Also, the Fed's narrative about maybe not needing to hike anytime soon.
And you see Neil Kashkari made news again this week saying we may not see it at all. The market certainly didn't like that.
That's right. Yeah. And he, Neil Kashkari is one of those Fed officials that honestly I don't listen to a lot, mainly because he says the same thing again and again. But then again, a lot of them do. But also, he's not really representing the central tendency, the median voter of the FOMC. He's a bit of an outlier, and he has been out there saying maybe we don't need to actually cut this year. But he always hedges what he says, because it's about if inflation doesn't come down, then we probably won't need to cut this year. Well, he's correct. If inflation doesn't resume its downward trajectory. So I think the market might be overreacting, putting too much weight on what he's been saying.
No, the market's overreacting.
That's right. Yeah, they never do that, do they?
But you talk about should they cut? Well, the rest of the world is certainly considering that. And if they do that and we don't, it will have an effect, for example, on the dollar.
Yeah. And I think that the market has been really beginning to price that in. The dollar has strengthened this year based on, I think, a lot of the expectation that the European Central Bank, the Bank of England, they are likely to start cutting rates this year. They're almost much more certain to cut than what the Federal Reserve is. And so when you do have that difference in direction of the central banks, when they start to go their own way, then you do see those currency moves. And that's really what's been reflected in the foreign exchange market.
Right. And of course, commodities as well. We see gold continuing to move up as well. And that's part of this conversation.
Yep.
But you talk about what's happening around the world. And of course, we can go to the other side of the pond completely and see what China is doing. And they are, of course, putting up big GDP numbers, but it might be fake news.
It might be. You always have to take their GDP or any of their economic data with a grain of salt, probably, salt around the rim of a margarita glass, just to really see whether or not there's any confidence in it. Because the GDP numbers, they're targeting about 5% growth. And coincidentally, they posted 5.3% year-on-year growth. So magically, it was within target.
But let me just jump in and say part of that is because I think they're dumping some of their exports around the world. EVs and solars, for example, if they dump that, it looks like GDP, but if it doesn't get sold, it really shouldn't be booked.
Well, that's true. And also, in addition to that, they're building extra capacity. So that gets counted as investment spending. So it's not just the exports, the consumption, but that investment spending. Now, think back to the global financial crisis. They built these big cities that were not occupied, bridges to nowhere. But what they've been doing lately is increasing production capacity for electric vehicles and for the green economy. And that's one of the reasons why Treasury Secretary Yellen went over there to basically tell them that we see you doing this and we don't want you creating all this massive capacity and then eventually trying to dump those products on the rest of the world.
And not only EVs and solar, but certainly there was news out of the Biden administration talking about tariffs, which was really a Trump thing, but this came out of Biden's camp.
I know. Yeah, it is campaign season, right? As far as know your audience, that's one of the key things. And when President Biden was speaking in Pittsburgh, he had announced that he had intentions of placing additional tariffs on steel and aluminum from China. And that does seem like something out of former President Trump's playbook. But if it plays well in Pittsburgh, you may as well sing the song.
Right, exactly. And of course, lastly, of earnings season, we are in full swing. Next week, there will be 150 of the S&P 500 companies reporting. That is a lot, but there's a lot of news coming out of that as well.
That's right. Yeah, 150 of them so far. We've only had about 13% of the company's report. Expectations coming in was to see earnings up about 3.4% year on year. So far, it's coming in relatively flat. It's still early days, but what we're seeing is a lot of divergences. Energy, it's expected that their earnings will be down pretty materially, but that's mainly because of what their earnings were last year. But then you
By
have
comparison, right.
So it's always that year-on-year comparison that can kind of catch people off guards.
And of course, we're going to look at the individual names as they come across. A story that you and I were discussing before we went on the air is that Red Lobster is contemplating bankruptcy. And in fact, I think it looks like they're going to do that because of leases and labor costs, restructuring Chapter 11, which really is, I'm interested in that because of the endless shrimp and teriyaki sauce.
Well, and also let's not forget those cheddar biscuits. Those things were delicious. Yeah. Mm-hmm. I mean, it is kind of sad when you see these really sort of almost legendary brands struggling like this, but they've struggled in the past before and have emerged from it. Now, thankfully, it seems like they're really planning a Chapter 11 bankruptcy, which means restructuring as opposed to a Chapter 7, which would be, hey, let's liquidate things. So it's about getting out from under the burden of the high debt and all these leases.
So a lot of names we can discuss throughout next week. But of course, folks, you got to know what you own and why you own it. We say it all the time, and how much you're paying for it. That's part of being a fiduciary.